Hello traders, welcome to today's live stream. It is the 3rd of April. It is 2 p.m. GMT. And what a few hours it has been in the markets. It has been absolutely insane what we've seen over the past, not even 24 hours yet. So I hope everybody's doing well. I hope nobody got caught up in the volatility, and I hope everybody was safe with their trading. I actually did a little bit of sort of buying and selling of moves that I was in. I was in a couple of moves in terms of looking at the silver longs. I did take a silver long position, and I ended up closing that out as the tariff announcement came out because it was just not going anywhere. It was just not going anywhere at all. I was stuck with an Aussie Kiwi short position. That worked out very nicely. That hit TP earlier this morning. So yeah, some really interesting moves overnight. We're going to discuss obviously what happened, what the situation is now, and then we're going to go from there. What markets could be impacted by this. Are there any trading opportunities from this? So we're going to talk about all of that in today's live stream, and hopefully you can all join in with me as well. Just going to make sure all my settings are okay. Just going to reduce the background noise here a little bit, because this music just kind of comes out of nowhere every now and again. Who we got in then? Dan, welcome. Hope you were doing well. Hope you didn't get caught up in any of the action, or if you did, I hope it was in a positive way. So yeah, let's go through what happened. What happened, right? We had reciprocal tariffs come out. Donald Trump whipped out a little board at his press conference with all these reciprocal tariffs listed on it. If you want the photo that I took, which I thought was pretty funny. I mean, obviously it's not funny in terms of markets, but it's just kind of funny because he just whipped a board out, and I don't think I've ever seen a politician whip a board out with sort of tariffs on it. So this is what we had. This was at 4:27 p.m. US time, so it was around about 9:30 for me last night. We had this from President Trump. It was these little tariff board. Hi Ratish, hope you're well. So what did he, what were the big sort of talking points of this? The first one I think was China, right? So China, he's basically saying that the US are charged sort of 67% tariffs by China. They are going to tariff them 34%. So he kind of made out like a lot of these places he was doing them a favor, because what he's very cleverly done in terms of, as he's presenting this to the US public, right? He's saying that, look, these guys, the European Union, tariff us 39%. We're only going to tariff them 20%, right? So he's trying to do this kind of smart way of kind of building that picture of, actually, we're just trying to get a little bit more for our money, I guess. But yeah, some shocking ones was China, 34%. And obviously, we don't know how that compounds, because he also put a 10% base across the board. So is this actually 44%? Does this actually mean that other goods and services are going to have even bigger rises on it as well? That's something to consider as well. Hello to you as well, Situ King. Hope you are very well. Welcome to the live stream. So what happened? Well, the market just whipsawed, really. I mean, if we look at, this is dollar yen at the moment. Dollar yen is absolutely sort of tanking right now, as the market's fear and uncertainty just ripped higher. And if we take a look at the volatility index, right, this was the big mover, really. And this is what set the tone for the market for me, was that we had this huge jump in volatility. So we moved from, where was the close yesterday? The close was at 21.49, and we jumped to the open of 26.41, now trading towards 27 on the volatility index. Now, when that happens, it just shows you that there is loads of fear within the market, loads of uncertainty. And that's what is driving markets right now. If we go take a look at how this has impacted the US stock market, look at the Dow Jones, down 1.9% today. You know, we look across to other risk assets as well. Go take a look at our crypto, Bitcoin, down 4.38% today. What usually thrives in these type of environments? It's the Japanese yen. Let's look at Kiwi yen, for instance. That's trading to the downside. Pound yen ripping lower from this 194.50. We actually talked about some short opportunities on pound yen. But dollar yen ripping lower, 2.29%. We can even see dollar Swiss as well, down 2.6% at the moment. So there's a lot of fear in the markets right now, and we're seeing flows into safe havens, right? Japanese yen, Swiss franc. We're not really seeing it flow into commodities yet. You know, I had a little look at gold earlier, but I think that's because of where gold is in terms of pricing. You know, it's up at $3,000, you know, and this market's just pulling back. Usually, and I've done this video before, when the stock market actually falls, we actually usually see gold go with it for an initial period, whether that's because allocation of funds, whether a lot of these companies have kind of gold in reserves, or a lot of you know, in a lot of fear, investors have gold and they sell gold back to the market, take profits to cover the losses over onto the stock market. That's a theory that I've always kind of stuck with, and that's why usually when we do see deep corrections in stock markets, gold actually goes with it. And you can have a look at a very simple comparison, and you can get your gold chart up. You can hit right click onto the US 500, for instance, and you can see they can follow a very similar tone. Obviously that hasn't been the case recently. We've seen that sort of big drop, but in the past, when you see stock markets fall, gold has gone a bit sideways. You know, in 2022 there was a big side of this. We saw that downside in the stock markets due to that larger inflation creeping higher, or inflation creeping higher. What did gold do? Gold went down with it. That's usually the opposite of what should happen. But then gold obviously recovered and is now outperforming the market. So this just shows you how much fear is here right now, is the fact that we've got these two assets that are not correlating at the moment, and the market's favouring that sort of gold positioning right now. Silver, yes, silver's getting battered right now, 5.85% down. Like I said, I actually took a long position yesterday, so let me show you that, and I'll show you how I got out of it. Okay, so this is I'm not going to show you the sort of account because it's my prop account, but this is essentially how I got in the trade. So I got in the trade here, right? So if I just go to the hourly chart on silver, I actually bought this breakout, so very much following my trading strategy, right? We had the markets making lower lows and lower highs. I'll change the color of that. Lower highs and lower lows, right? We kind of bottomed in and around this area here. Market broke that kind of structure, and so I ended up taking a long position. So I was watching this throughout the day, and I tell you what, there must have been a huge seller here around about $34. And the reason why I say that is because every time we came into that level yesterday, the market just failed, right? And I was watching it on the 15-minute time frame. Let's see if I can go back here a little bit. I was watching it on this 15-minute time frame yesterday, and every single time we kind of got into this area, we rejected. So one big tell for me was, this is where I got long, right? Market came up, dropped in, so we sold off here. And I wasn't too bothered by this at the time because my stop loss was here, right? So I wasn't too bothered by this sell-off, because I said to myself, if price breaks and closes below these lows, then that trade's probably not going to work out. I'll just exit that position. But then we rallied back up. Now this candle here was the big tell for me, because I watched this happen in real time. The market rallied up within minutes, and I mean like 2 or 3 minutes. It rallied from this area here up into that level of resistance again towards that $34, and then came all the way back down and closed lower. And I thought, someone is defending this level. There's a big seller here and they're defending this level, because you can see that by the reaction on this 15-minute candlestick. We got back up there again, we sold off, we got a little bit higher, we sold off. This was where the tariff announcement came in, and that's where I exited, because I didn't like the fact that we tried to break out of it numerous times and we just could not sustain above $34. So I ended up just exiting that position, and I mean, that's probably one of my best early exits of the year so far, because it was in a very slight profit, and I would have taken a full loss here if I left that open through those tariffs situation there. The only other one that I did well on, which I'll just cover quickly, was Aussie Kiwi. I ended up getting short just here, ended up taking profits this morning as price came down into those swing lows. But yeah, that was a very kind of interesting play just on its own, but I'll talk about that one in a minute. But yeah, silver prices are absolutely tanking at the moment. I do still feel like overall, you know, I do feel like if the market does rebound from this and we do see sort of a deeper, I'd say, correction in the stock markets, I do think the market will go and take a look at safe haven assets. And I think gold will probably rebound from that. And I think silver would also be dragged with it. But at the moment, with all this uncertainty and all this volatility, you know, we've got the market spooked essentially. And what are people going to do when they're spooked? They're going to take profit on their positions. They're going to hold cash maybe, or even think about flipping their decisions. And I think that's what we're seeing a lot of these commodity markets now, because they've gone up a decent way. You know, if we look at silver from the start of the year, it's up 18-19%, right? So that was really good area for them to start taking some profits. I want to say them, it's, you know, it's the guys that are moving markets, it's the guys with the big funds, right? So they're going to be taking some profits off, and once they do, all those buy orders turn into large sell orders. You know, when you look at gold, how much has gold been up this year? It's been up a ridiculous amount this year already, which is, you know, 21%. If they can lock that in while this uncertainty is going on, you know, then I think that's a good thing for certain funds, right? So that's where I think the market heads at right now. You know, and we did talk about the narrative yesterday, on Tuesday. We talked about the market narrative and is this tariff situation over? I didn't think it was over. I thought that we were in kind of act 2. So, you know, and now we're starting to really see that kind of pressure coming in across markets at the moment. Like I said, S&P down, silver down 6%. It has surprised me, to be honest, that we are down 6% on silver. I feel like that's quite a big turnaround. And it doesn't make me want to go, oh yeah, great, I'm going to just go buy this market, because that's not how I do business with the market. You know, I want to see these nice trends develop. But it looks like 34.50 was that holding point at the moment, and we are seeing that dip in silver. But you know, overall, I still feel like silver could be, by the end of the year, still up at that 35.50. Just need to wait to see, you know, how the market kind of reacts to it and digests all this information. And then where does it go from there? I mean, oil markets also down as well. Big move from that 72.50. You know, this is where we had that resistance zone, but at the same time, we were like, is the narrative of oil shorts over? Well, obviously not. The market's kind of sold this off aggressively as well. But the big thing for me is bond yields. Look at the US 10-year yields right now, down 2.67% on the day, but also breaking through these areas here. Now, what is that telling us? It's telling that the market wants to see stimulus, really, or potentially see stimulus from the Fed. Now, usually when the US 10-year falls, we see the market go into more sort of risk on, you know, like stocks rise, things like that. But the problem, the other side of it is, you've got the situation that if people are buying bonds, then they also have an element of fear. So when you see stocks fall and bond yields fall, that's not usually a good thing, right? That's not usually a good thing. Hi, right guy. I hope you're well. Lesol, Tabo, welcome. Thank you for joining me today. Right, guy, I did get caught up, but it worked out. My euro dollar hit TP and I closed out one short position in Aussie Kiwi and I had one more open. Stop loss to break even. Yeah, love that. Aussie Kiwi was a market that I was very interested in as well, from the currency strength meter. And yeah, that one worked out pretty nicely. This was the trade that we put on basically on Wednesday, and I was looking for this continuation to the downside, which again worked out pretty nicely. And another one that I really liked was Aussie Swiss downside. I had a possible sell zone up at 55.80 as well, and this dropped pretty nicely as well, but I didn't take any sort of trade here. Let me just pop this back over here. So yeah, very interesting markets at the moment. I mean, it could be very easy for you to feel like you're missing out on this move. I mean, I hope I answered the question there, Ratish. Sorry, I missed that. But yeah, I think these market conditions can be very easy for traders and retail traders in particular to think that they're missing out. So they'll try and pile in on these short positions now. I don't think that's a smart decision. Always wait for the market to kind of play its hand first and then think about how you can position yourself after the fact. You know, looking across the markets right now, it is a bit of a bloodbath, and it might not end there. It might not end there, because if we take a look at US dollar yen, we also have NFP data coming out, right? So tomorrow we've got non-farm employment data, expected to see a decline to 137. Now this is one thing that we're going to start having to look at, because if the markets are fearful and we're seeing these huge drops in the market, then what are traders expecting? What are investors expecting? What's the mood? What's the sentiment? Well, it could be the fact that they're eyeing up lower growth, right? We saw this in recent data. Consumer sentiment surveys were showing us that the market was very fearful already. And then you've got the idea now that slower growth in the US could be coming. Now, if we start to see slower growth because of these tariffs, right, because costs are going to go up, then what's going to happen to the unemployment rate? That's going to start creeping up, because the first thing companies are going to do is they're going to make layoffs, right? They're going to make layoffs because that's how they're going to see a way of saving money, okay? And if that continues, what will that mean? Well, we'll likely see the unemployment rate rise. The only benefit you'll see is that inflation will come in lower. So we might start seeing the Federal Reserve cut rates a little bit more aggressively. And that's what the market's trying to price in right now. Now, I did a talk to you guys about sort of watching bond yields and comparing bond yields together. And it's a real key thing to do, right? So when I put in the 10-year bond yields here, and this is something that if you trade FX, you should be doing this, okay? You should be doing this. So what I have here in purple is the US 10-year bond yields, right? And then the candlestick chart is, well, I'll turn it to a line chart. The black line is US dollar yen, right? Now the US 10-year bond yields have been falling for some time, and they even started to fall again, even though dollar yen started to kind of, if I just put it back on a bar chart there, started to kind of hold around this 148 area, 150 area. Bond yields was crashing lower. That was a really good chance to get short dollar yen. As this kind of just continued to rip lower. I mean, if I just change this into a candlestick chart, you can see that US 10-year bond yields didn't really pause. They continued to drive lower. And what happened to dollar yen? It dragged down with it. Okay, so there is a nice sort of correlation here between these two assets, and you want to keep an eye on US 10-year yields, because if they fall, it means that the market is either fearful or is expecting rate cuts to come. So it's being priced at 4% right now. what is the US rate at the moment? It's 4.5%, I believe, right? Again, the CME Fed Watch tool. I wonder if this has changed. I haven't actually looked at this. Let's take a look at the CME Fed Watch tool, because I haven't actually seen if the chance of easing has gone up. Okay, so despite these tariffs, we've not really seen too much of a change. If we look at the change table down here, we can see that from a week ago, we were at 88.4% of a chance of no change. That has come down to 75.4%. So we are seeing the chances of no change come lower and the chances of a change move higher. And that's in the May meeting, which is on the 7th of May. I think if we do see upticks in unemployment, and if we do see continuation of this downside that we're seeing in markets, then maybe they will start to price in cuts coming in May. A big part of that for me is those bond yields. We are at 4.5% right now in terms of the US interest rate, and current US 10-year bond yields are at 4%. So they're expecting at least 2 rate cuts still. If this continues to drive lower, maybe they're expecting 3 rate cuts, and that is going to be very bearish US dollar. Other markets that we can talk about, obviously euro dollar. I think euro dollar is probably going to benefit from this a hell of a lot. If we go take a look at the EU 10-year yields minus the US 10-year yields, they started to rally here on the 28th of March. Look what euro dollar is, right? I'm trying to side by side it. So here's euro dollar, right? I'm going to the daily chart. Okay, let me just get rid of those drawings. Look at that. Big spiker, big spiker. Now, US, the spread between the two was moving first, right? Because we were already moving back to 1.4% or minus 1.4%. Okay, that at the same time was here on euro dollar, right? This kind of consolidation period here before seeing that continuation up to the 111. So euro dollar now has a really good chance to continue to break higher. And what this is showing us here, this chart here, is showing us that investors are taking their money out of the US and they're putting their money into euro. Why are they doing that? Well, there is huge stimulus coming from the EU, huge stimulus in Germany as well, which is the biggest country within the EU, okay, or the biggest economy within the EU. So if we start to see huge stimulus there, then that's what investors are going to price in, and that's exactly what they're pricing in right now. So for me, I think euro dollar longs are very appealing. I also quite like the Norwegian krona, which is something we talked about a while ago, because Norway's data has been pretty good. And I mean, that has continued to drive lower. This was a market we spoke about over a week ago, must have been sort of maybe even 2 weeks ago, where prices were at this 1050 area. This market has continued to drive lower because of the fact that we've got those difference between interest rates and bond yields and things like that. So very, very interesting markets at the moment. And to kind of just stick on the sort of downside path here for the US right now. This is also a chart I think that you should keep an eye on. I'm going to put this in the chat. Okay. So what this is the 10-year yields, okay, or the 10-year bonds minus the 2-year bonds. Okay, that's all this is. Now you'll hear things like the inversion of the yield curve. Okay, now that's when traders are favoring short-term bonds over 10-year bonds, okay, over the long-term bonds. And that's, think of it as a euro US dollar chart, right? If euro dollar is moving lower, it means the euro is weaker than the US dollar. Well, if the 10-year minus the 2-year is moving lower, it basically means that bond traders are favoring short-term sort of loans to the government rather than longer term, which means that they're fearful in the market. And then what we tend to have is what is known as the inversion of the yield curve, right? Which are these moments here. Okay. Now, what tends to happen is when they uninvert, like here and here, so you see these grey boxes there, they are recessions. Okay. And it usually happens after these moments here. Okay. It usually happens after these moments here. And we can see, you know, even in 2020, we had this little, you know, inversion of the yield curve, and then it uninverted, and then we had a recession in 2020, right? So are we on that path again? Are we on that path again? Okay. Where did you get the EU 10-year minus 10 US 10-year chart? You can make them yourself on TradingView. So what you want to do, you can follow this along with me if you want to. So you need to type in EU 10Y minus US 10Y, okay, and just hit enter, and it will build that chart for you. So if you want to look at sort of pound bond yields versus the US bond yields, and you want to look at it in terms of pound US dollar, you can go GB10Y, sorry, GB10Y, which is the 10-year government bond yields, minus the US 10-year Y, okay? And you can hit OK on that, and it will give you that information as well. So again, you can see if we go take a comparison chart, okay, always compare it as well to give you a good example of what's going on. There we go. So you can see that on these pound ones here, recently anyway, we saw the yields rise first, and then pound went after the fact. Okay, really good example of this is you know, dollar yen and the US 10-year yield. I did a very interesting chart a while ago which showed you oil prices versus the 10-year yield versus the dollar yen price, and you actually find that oil prices are the lead indicator there, because if oil prices fall, it tends to lean towards lower inflation, and lower inflation is something that bond yields are trying to price in, or higher inflation, they'll try and price in those interest rate changes. So inflation means a lot to them, and that's when you can kind of get these kind of really cool charts that you can develop using TradingView. I'll see if I can find it. Let me see if it's on one of my posts that I was doing before. Let's have a look. Yeah, I did a post called "Oil Prices Matter More Than You Think." Okay, so let me just see if I can recreate this chart. So I went to oil prices, so I just used crude oil futures to do this. Down 7% today. This is insane, absolutely insane. Right, so let's put that on a line chart. Okay, and what I'm going to do is I'm going to go grab the US 10-year yields. Right. To compare. Where did that go? Did that join the chart? Where is it? Hit regular and see if that comes back on. I don't know where that's gone. I'm adding that to compare, but it doesn't seem to be comparing. It's kind of stuck. Maybe it's because I'm using that. Oh, here we go. Right, okay. For some reason, it just popped back on. Can you guys still hear me? I don't know whether that was because my internet went a bit funny or whether that's just... It was just being slow. Probably just being slow. Right, now we need to get US dollar yen. Let's see if that loads. Being very slow there. Probably because I've got 1,000,001 tabs open. Let's get rid of some of them. Let's see if this loads, because what I want to do is I want to show you how, here we go. I want to show you how oil prices can often lead to sort of some decent kind of, can be a decent lead indicator basically for a lot of stuff. So this was in 2020. This was after obviously the situation with COVID happened. And what we saw was oil prices, which are this black line here. I'm just going to change one of these to a red. So dollar yen is in red. US 10-year yields are in purple. And then you've got oil prices in black. So what we saw was the fact that oil prices kind of went first, right? And they started to rally higher. US 10-year yields then joined that, right? So this is where oil prices rallied. US 10-year yields, which is the purple, then started to rally. Then dollar yen followed, right? So as this kind of like lag from between each one, right? You had oil prices go first, US 10-year yields follow it, dollar yen followed that. We even had a very similar path here. We had oil prices which fell, then we had the US 10-year yield fall, then we had dollar yen fall, right? Oil prices rallied a little bit, then we've seen dollar yen and US 10-year yields rise. Now looking at things, okay, in the grand scheme of things, you can see that oil prices are dropping. You know, how is that reflecting in the US 10-year yields? How is that reflecting in US dollar Japanese yen as well? So if oil price does break lower, and if we do see these kind of breakdowns of these swing lows here, then it could drag those markets with it. And that's great for Forex traders, right? Because that means that we could be looking for further downside on these moves. So when I see this kind of happening in the markets, what I'll do is I'll go to my dollar yen chart and I'll be like, okay, great. How do I action opportunities on this now? So all I need to do is wait for sort of pullbacks. Not what this one is here, right? Let's merge that. So now we'll see this kind of pullback in here. All I'll be looking for now is, can we get another pullback? Can we look for further downside on this market? Can we see another sort of break in those trends? But that 151 was a really good area to look for shorts. And to be honest, I got short. I did get short at that level, but I ended up taking myself out of it for a small loss. And that would have been a very, very good trade. Unfortunately for me, I just made the decision to cut that because I thought that the price action was changing, and I thought that it might try and pop up to sort of 152 before it did roll over there. But there, so markets are just kind of in a little bit of free fall at the moment. Let's take a look at gold. Gold kind of hit this upper sort of level of this channel that I had marked out, and is starting to reject that area. I also added a Fibonacci on here as well. Just looked at the extension levels. I just wanted to see how far overextended gold was, and it was fairly overextended, and it came up and hit that 161.8 level, right, pretty much to the dot, and then rolled over here. Now, I'm not a huge believer of these Fibonacci levels, but you know, I know a lot of traders do use these fib levels. You know, if we looked at it from a daily chart point of view, and we go from the swing low to the swing high, I draw my fibs backwards, by the way, just to let you know. You're starting to come into that 38.2 area here. one thing with fibs, if you watch the 23.6 level on your Fibonacci, if price closes below that, there is a very high probability that the market is going to change trend. That's just something you should know. Because I used to have a strategy where I would use the fib for trending opportunities, and what I did was, it was almost like a set and forget strategy. So if the market was kind of trending higher, right, and I measured the sort of move down, or I measured that sort of primary phase in the market, okay, I used to set two trades. I used to set one at the 61.8 with my stop loss below the 0 line, and my target was 127 extension, because that was a 1-to-1 risk reward ratio. And then I'd set a second position at the 38.2 Fibonacci, right? Stop loss at the same as the first one, target up at the 127 extension, because that was more than likely going to be either a 1.5 or a 2R trade. So this is how I used to kind of trade sometimes if I wasn't around at the computers. You know, one of my first ever trading strategies was the Fibonacci retracement limit order strategy, where I would just set and forget. I would put this risk on at 0.5%. I'd put this risk on at 0.5%. And if the trend continued, fantastic. Hopefully I'd get the tag in at 38.2 as well, because that would give you a bigger risk reward ratio. And essentially what you would get out of that is 0.5 plus 1, and you get 1.5R if you got the 38.2 trigger point. If we lost 1R, right? So, you know, it was a positive risk reward strategy. Basically, I was looking to try and take on that move. I also did a one where I would buy at the 23.6, targeting the 127 extension as well, but that just never really got tested all that often, and if it did, it more than likely got stopped out. So that's why I kind of stopped doing that one anyway, because and that's why I said to you, if price breaks below the 23.6 Fibonacci level, you're more than likely going to get stopped out. So that's something to just keep an eye on when you're looking at sort of trends in the market, when you're looking at higher highs, higher lows. When you get that close below the 23.6, the likelihood is that that market is going to reverse. You know, just to kind of give you an example here, I can see that we've got a trend here. We go from the swing low to the swing high. We've got a close below the 236 on this candlestick here, right? Market rallied to the upside and then continues to punch in lower, right? Because you'd go from that swing high to that swing low there, right? So you'd be looking at kind of shorts around 38.2 and the 61.8. Obviously this is one that wouldn't technically work out, but that is going against the overall trend. But yeah, gold is having that little kind of bit of a move down at the moment. I mean, whether this will recover, I still feel like gold longs would be something that the market favors. We've seen it recently, right? Any kind of dip that we've had in gold prices at the moment, it's been bought back up again. So, you know, we're seeing a lot of selling of gold at the minute. That could be a good area to be a buyer of the dip if you're an investor. Silver, I'm not so sure about. You know, I like the idea of being long silver, but that's quite aggressive there. So I'm not going to hold on to that one at the moment. If we look at the gold silver ratio, wow, that is moving. That is moving. There's going to be a point where this swings, and when it swings, this is where we're going to want to be in silver. Maybe it's around 100. If it gets anywhere near these 20 levels, you know, I'm going to be very active buying silver, because usually when we see these huge drops, silver gets very bullish. So yeah, I'm gonna really keep an eye on the gold silver ratio, because what it says to me is that investors are favoring gold over silver right now. But that will come to a point where gold will become very expensive to buy. So we just need to wait to see how that one kind of shapes up and how that one plays out. Any questions so far, guys? It's been a quiet stream today. I know I've kind of drilled a lot of information into you today. You know, we've talked a lot about the bond yields. We've talked a lot about the 10-year minus the 2-year. I don't know if you can get this chart on TradingView. I wonder if you can or not. Let's see if we can just. That's not what I wanted to do. Let's go to add. Oh yeah, you can. So if you want that chart there, you just need to put T10Y, 2Y, and click on that. Okay. We don't want to add it to the gold silver ratio though. Ah yeah, sweet. It's even got the 0 line in there for you as well. So again, this is something that you can keep your eye on. I'm going to add this to my bonds list. Watch list. Number 2. There we go. I'm going to add this to my bonds. Let's add it to the US bonds. Okay. Treasury bond ETF is still falling. I imagine this will rally as investors invest into bonds. Let's have a little look at the futures market. That gas, the only one that's up today, pretty much, along with volatility. These are your bonds, not your bond yield. These are the bonds. You know, market's moving higher here on bonds. Yeah, Japanese yen. I feel like the Japanese yen is going to go ahead for these highs now. Let's have a look at the Swiss franc. Swiss franc in a very similar position. We're going to head up for these kind of weekly highs. Kind of trades this range pretty lovely on the futures market. So I think it's going to just whip towards that 1.2 there. I mean, let's talk about Mexican peso. We can talk about Mexican peso. We can talk about dollar CAD a little bit. This is another market which didn't surprise me in terms of it moving lower. I was surprised that they were left off the list. So Canada and Mexico were left off the tariff list. But we did talk about on Tuesday whether the narrative here had already been priced in. And look at that. It just shows you that this narrative here was priced in. Market breaking lower here. We're trading lower now. I think dollar CAD, I like the idea of buying CAD. And there was a couple of markets that I liked it against. Let's have a quick look at that. It was, what was it now? It was, let me go here, strength and weakness. So we wanted to buy it against the Australian dollar. We also potentially wanted to buy it against Kiwi and maybe even the pound. Pound a difficult one, but against the Australian dollar, it broke lower. Okay. Oh, I remember this now. This is where we said, this is the range. And I said, I'd rather be short from the high of the range. That would have worked out pretty nicely as well. Again, in terms of, you know, market, because we were talking about Aussie CAD shorts and the fact that it was in this trading range. And if I've got a preference to be short, I want to be short from range highs. And it looks like we've got this nice little break and retest, but I'm gonna let the market settle down now. I don't think I'm going to trade for the rest of the week, to be honest. Aussie Kiwi came in pretty nicely for me. I only really need one good trade a week to do all right. So I'm not really focused here at the moment. Euro Aussie took off again as well. Again, another market that we liked to the upside. What was Pound CAD? It was Pound CAD, wasn't it? Aussie CAD, Kiwi CAD, and potentially Pound CAD. So Pound CAD also falling, but I don't expect this one to be as good as the others. Kiwi CAD actually up. Kiwi's been a little bit stronger actually. Not necessarily reflected on the currency strength meter, just
reflected against things of like, you know, if you look at Aussie versus Kiwi, essentially. Okay. Right then, guys, I might leave it there then. Obviously, crazy moves in the market. Keep an eye on some upcoming data. We do have the non-farm employment change coming tomorrow. It is forecast to come in lower. Seasonally, it can come in a little bit higher, but at the same time, you know, markets are in a bit of an area where it's fearful right now, and that's why we're seeing a lot of safe haven players at the minute. So yeah, I'm gonna leave it there. I hope the rest of your trading week goes well. Don't get suckered into anything, you know, stay calm and you know, trade the right moves. And I will be back on next week, hopefully. And yeah, I will see you all then. So cheers, guys. Enjoy the rest of your week, and I'll speak to you soon.